Warriors, we get to talk to Benn today. We get to see Benn. We get to talk to Benn. Benn Maldonado and I have been having these conversations for quite some time. I will tell you that Benn was bullish gold and silver years ago when we first started talking about the Epoch cycle. So it's going to be interesting after Sammy Slammy came in last week to see what he thinks there. He has a great service, plus three forecasting, and a great YouTube channel. And Benn, great to have you back on TradeGateHub, buddy. I know it's February, but so what? Happy New Year.
Happy New Year to you, Dale. It's great to see you. I always enjoy our visits. The back and forth and the how you think and how I think. It's good to get confirmation, that
Yeah.
you're not out there alone. And we usually find some pretty good ideas together to go after.
Yeah, I mean, the epic cycle and how you positioned yourself. You've been called a big part of the Bitcoin ride. I know a lot of people appreciate you. I did something with Margot Amala and some other planetary guys, Jared, and I forgot yesterday, and they brought your name up.
Oh, really?
Yeah, so you're well known in a lot of different circles. I bet people would like to know how you ended up in this business. I'd like to go back to the genesis, not when your mom and dad fell in love. Okay. And you were conceived, but how about starting at Wharton? When you were in Wharton and you're getting your degree, what were you visualizing or what were you thinking you were going to do with your future?
That's a great question because there's so many different paths there, within Wharton. You got finance, you got marketing, you got M&A, you got investment banking, there's
You,
security
you
analysis.
got Donald Trump being a graduate.
He was, and it's funny that I tell this story. I don't know if I told you. He came and spoke when I was an undergraduate, right? This was
Oh,
like during the height of Art of the Deal, and he came
okay.
in after, like one afternoon. This big lecture hall in Wharton was packed. I mean, standing room only, people sitting everywhere, and he's going through and giving his talk. And he starts taking questions, and this one kid says, Mr. Trump, we have a lot of prestigious alumni here at Wharton, like yourself, and they give a lot of money. And
Yeah.
he says, would you make a pledge to give, and how come you're not on that list? And would you make a pledge to like be one of the top donors? And
I
and,
love
and
that.
the crowd kind of sensed that this kid was challenging him, and everyone went like, ooh. And Trump just, without hesitation, he said, what's your name, son? And the guy said, Joe or whatever his name was. I don't remember his name. He says, I'll tell you what, Joe, I'll match you dollar for dollar. And the place went crazy and laughed because, he totally
Yeah.
parried that attack. And it was really interesting how he did that. It's kind of a preview of how he deals with the press now. That
Yeah.
was 30
Yeah.
years ago when that happened.
Roy Cohn was his mentor.
Well, I'll tell you that
So anyway,
that's my
yeah,
that's my only Donald Trump.
that's a good story and a great comeback line. Um, yeah, he knew his risks. The kid was a student,
Yeah,
right? So
exactly.
I mean, he had a good stop in.
It ended the conversation, right? We were on another
Risk
topic.
management.
But anyway, when I was at Wharton, did I ever think I was going to be trading? Probably not. I
Yeah.
thought I was going to be an analyst, or really what I focused on, because one of my majors, and it was before this became sort of a popular thing, is I was an entrepreneurial management major. So I took a lot of courses where people came in who were in the real world and told their story, and we kind of got an understanding of what it takes to be an entrepreneur and the different skill sets and things. So that was the path I wanted. I always wanted to run my own business. I didn't think it was going to be trading, but I'm basically running my own business by trading now. So
Okay. So what was your first entree into the market? Did you have mentors? Did you read books that influenced you to this day?
Yeah, I did. I read books about, great traders, like Reminiscence of a Stock Operator. I
Right,
read some Gann stuff. The Why am I blanking on the name of it? A Tunnel Through the Air. I read that one. I read Gann Trading Made Easy, which is available on a PDF for free on the
wow.
net. People can look it up if they're interested in the Gann squares and the
It
basis. That's
wasn't it wasn't free when you were researching Gann.
no, but it's free now. I mean,
Yeah,
you
yeah,
can pick up the PDF and read it. It's
yeah,
fantastic. So
yeah,
I did have a mentor who helped a lot, because when you start out, it's like you're drinking from a fire hose, and if
yeah,
they can sort of get it down to a garden hose, it makes it a lot easier to take it all in and figure out what fits with my style, my personality, because it really is about finding a method that's comfortable to you, because you can't just trade someone else's method. It has to fit with your personality, your
yeah,
sense of risk reward, and where, and this, Dale, what your foibles are. What are the things that
yeah.
trip you up? And you try and get a system that compensates for that and mitigates that.
I've got one. I turn off my trading station.
Yeah, sometimes you got to walk
You know,
away, right?
yeah,
Put the
yeah.
trade on and you got to walk away sometimes.
All right. What was your first trade, Ben?
That's a good question. What was my first trade? Probably in the futures, it was the trading ES futures. And unfortunately, it was a great trade and I made a ton of money on the first trade
Oh, you had
because
that
it
jinx
reinforced
too.
bad habits, right?
Yeah, yeah,
And I paid the price for that down the road. But
yeah.
I mean, unfortunately, for most people, you have to feel the pain to change, right? And the pain of losing
Always.
or the pain of giving back tremendous profits that you've made is real. And it's a
Yeah,
motivator.
yeah. Mr. Disappointment.
Yeah.
We all shake hands with him. We should make friends with him because our greatest lessons happen through our greatest mistakes. Yeah,
Those are wise words that everyone should write that down and like put it on a card in front of their monitor, because if you look at your mistakes as potential opportunities, that's how you get better at trading,
yeah. And
right?
it takes time. You
You
have
got to
to be
learn the
patient.
lessons.
How many years do you think it took you to have a breakthrough to where you felt comfortable enough that you could live off the markets?
About 7 to 8.
Okay. Yeah.
It was that long.
Okay. Beat my
So it's overnight
35.
success in a decade.
You learned faster than me. Took me 30 or so.
Wow. But the truth is, Dale, we're always learning, right?
Yeah, we are.
You're always learning, you're always getting better, because there's no such thing as perfection in trading.
No, you can't expect perfection at the crap table.
No, no.
Yeah,
And you gotta deal with that constant, psychology of, hey, if I lose 45% of the time and win 55% of the time, I'm really profitable, right? If
yeah,
you have a good risk reward ratio, you're really profitable. But you have to deal psychologically with losing, 45% of the time. You enter the arena, and that's tough.
yeah, yeah. Well, I tell people I went to the Rocky Balboa Trading Academy.
There you
So
go.
you know what happened to him, and he had to get up a few times.
Yeah, that's
So I'm very interested, and I'm sure everyone watching us today or that watches the video are interested in what you're looking at now. I know you've been talking about the risk in the private credit market
yeah.
a while ago, last fall,
Hmm.
before it really started hitting the news. And I think you believe that's really um, the potential biggest black swan out there because it's so opaque. We don't know until they're in trouble, not before they're in trouble.
That's right. That's one of them. And I think there's a new thing that we'll talk about, which is in the cycle that we're in. the bigger, this bigger epic
Epic.
cycle that we're
Yeah.
we're transitioning from one to another, and it's a
Yeah.
400-year cycle, so it's a massive cycle, and it's probably why everyone feels so out of control because all the things that we've been depending on are sort of crumbling before our eyes because the current system has to be replaced, and in order to replace it, you got to tear it down, and it's being torn down systematically by this cycle. And we're in the phase now where everyone's looking for that thing that's going to save us, right? It's going to make everything better and everything's going to be great. And they're hanging their hat on it. And in doing my studies at the end of last year and the beginning of this year about what we're looking at happening in 26 cycle wise, what's likely, the disappointment of whatever people are hanging their hat on.
AI.
AI. Exactly, Dale. Everybody's saying AI is going to save us. It's going to create this abundance. It's going to create, it's going to kill jobs, but people aren't going to have to work because everything's going to be great. And I don't disagree that maybe we get there eventually with AI,
Yeah.
but a lot like the internet, 25 years ago, you had to go through the pain and the destruction first and weed out winners and losers to get there. And so I think AI is going to be the new thing that we all get disappointed by and investors get disappointed by. And you're starting to see, and I've posted a few things where, like Jensen Huang the other day was saying, I never said I was going to invest 100 billion. I said it was going to be up to 100 billion. And we appreciate the opportunity. So
Yeah.
the hype, which I think is warranted, is always overdone. And so if that carried us for the last year and a half, 2 years,
Yeah.
and that disappoints us, we could be in for, a decent bear market for the next 18, 24 months.
Okay. Oracle was the canary.
Maybe.
Yeah.
Yep.
Okay.
Could be.
And semis have been making new highs. They look like they might be peaking now, but Nvidia hasn't made a new high for quite some time, and that was leadership. Broadcom, same thing. What's happening to AMD today, and it does seem like there's some liquidation. I wonder if they're going to rotate, and this is something I want to ask you about too. We've seen sectors, people get out of one and they'll move to another.
Right.
Do you think people think it's illegal to liquidate something and sit in cash without rotating and having to buy something else right away after you sell something?
I that's a great point, and I think that's symptomatic of this fear of missing out, right?
Yeah,
Because the markets have been so strong for so long now
yeah,
that as that sentiment shifts, then I think we're going to finally see the sales go to cash or the sales go to something defensive as opposed to
yeah,
rotate into, where's the next great story.
yeah. Okay, well, you always put together a very edifying PowerPoint. Do you want to take over the screen like
Yeah, let me
Outer
see.
Limits did when we were kids? They say we've now got control of your television set. I go, Mom, they're taking over the TV.
Yeah, let me see. Let me see if I can do that.
Yeah,
Okay.
it's a lower
Yeah,
button
I got you.
coming up.
All right, let me put this on presentation view so we can see it better. There we go. You got that?
Yes, we've got the TGH presentation.
There we go. So the main this is going to be the sort of preview slide of what we're going to go through. So we'll quickly hit on these things and then we'll dive down into each one uh more detail. So we're a month into 2026 now. And I think the key thing I want to do is give everybody an idea of what to expect going forward. Now, remember, if you're in the trading world and in the trading business, you know it's a business of probabilities. It's the same thing with cycles. I've incorporated cycle work into my um, into my trading because I always wondered, what caused things to change, and how did some people know or have themselves positioned for that change. I said, there's got to be a reason, right? There has to be a reason. And so I've been on this sort of 20-year journey looking at cycles and understanding them and trying to incorporate them into what I do, because it's just another way of sort of stacking the probabilities in your favor, right? If you're going with the cycles, you're stacking the probabilities. If you're going against the cycle, you're really you're fighting the odds and you're making your odds worse. So
Okay.
this coming year, the things that I think we really have to be aware of is that the fragmentation and the separateness that we've seen in society and in the world is going to get worse. The lines are being hardened, and it's becoming less sort of flexible and less open to the quote unquote other side.
They
The
can't even talk to each other for, well, one sentence, and there's a volcanic reaction.
Yeah, it's and
But
there's even less of a desire to speak to them now, and we'll touch on that. Um, I think we can expect an economic slowdown, and we'll see it accelerating after Q1. And we'll go into the reasons why and why the probabilities are higher that this is going to happen. I know there's a lot of people out there who've been saying, oh, they people have been calling for a recession for 2 years now, and we still haven't had one. Well, fair enough. And if you look at how and why we've had a decent economy, this is why I think things are still pretty tenuous. The last one is nothing new, Dale. We've spoken about this one before. It's that there's a high probability that the United States and the world is going to be involved in a massive sort of kinetic conflict. That I think is not shocking to anybody, given the hair triggers all over the world. I think that's going to happen.
okay, is there a chance that what's happening with um, the tribal lines hardened, and it's not just in the U.S., it's global, except for countries that are dominated like China, that governments will be too busy managing their own population that they may not be able to fully engage in a global kinetic war because they're having trouble just keeping the peace or controlling the population in their countries.
I hope that happens, because then it'll give us a chance to not have a full out world war.
Yeah,
But yeah, that's a real possibility. I mean, you see it already in Iran and other places where, the population is just fed up. People are fed up,
yeah.
and they're willing to die and fight over it. So
Well, here too.
yeah, there's no question about it.
Yeah,
We're going to talk about silver and gold. Obviously, we got to talk about that. They're on
yeah.
everybody's mind, and
I'm real curious what the next silver is.
yeah, the next silver.
Is it wheat?
Hey, food is going to be important. I think you're
Okay.
absolutely right. We'll
All
talk about
right.
the
Because
grains later.
I think, in the grain complex, wheat might be the silver of the grain complex,
That'd be fantastic because
with
I
beans
love it.
being the gold.
Yep.
Boy.
We'll talk about some GAN price and time analysis that I've done, that I shared, higher time frames like monthly, weekly, and then we'll
Okay.
go over some highlighted markets, some opportunities, combining cycles and technicals, which is sort of my method.
Okay.
Everything's about the tribe now. If you've had any contact with any human being, this is true.
Yeah.
There's litmus tests before they're going to talk to you or have dinner with you or have a drink with you. And the bottom line is societies in the world are becoming more and more separate, and they're being separated along ideological, religious, you pick the characteristic, they're being separated. And the thing that's most disturbing to me, and we briefly talked about it already, is there's no interest in having a discussion with anyone who disagrees. It's like they are subhuman if they disagree with you, and that's how
Dangerous. Yeah.
you know that's how you can justify violence and murder of another human being if they're not human, right? You
Yeah.
dehumanize them. It happens in every war, and it seems to be happening just in within countries about
And
people.
every genocide.
Yeah, absolutely.
Yeah.
This is clearly going to make business and relationships more difficult. Um, the one thing, again, I'm not a political guy. The one thing that Trump is trying to do is he's trying to use business to sort of smooth over differences. And he's trying, but it's not working because the differences are the key, right? The differences in ideology or differences in philosophy. Um, he's having a real hard time. And so I think that's also a factor that we'll talk about as to why we might see a slowing economy, or odds favor things are going to slow down. It's going to get tougher to do business.
Well, the tech oligarchs are certainly chameleons, Ben. They've navigated both sides of the political spectrum with their checks, right? On
Absolutely.
their donations, and they're doing fine. And
Hey,
we
Dale,
know they go
remember,
ahead.
Tip O'Neill and
Yeah,
Ronald Reagan made a deal.
I know.
Newt Gingrich and Bill Clinton made a deal.
Right.
And those four could not be more ideologically opposed if you
Great point.
tried to make it, opposite.
Yeah.
So unless we get back to that, there's just going to be friction and conflict and less global activity, right? Less GDP, less business done. If you're cutting off half of the population because you don't agree with their politics, you're eliminating half of the market potentially. I mean, what did Michael Jordan say? Republicans buy sneakers too. That's why I don't talk about politics.
Smart guy.
So yeah, smart guy. I mean, the last one is sort of the epitome of the entrenched nature of things, is right. We're
Yeah.
right and we're good. They're wrong and they're bad. And I think that sums up, kind of where we are right now as a society and as a world. And until that changes, it's going to cause conflict and friction.
Okay.
All right, let's go to the next
You
one.
know, just to give some perspective, I actually saw a show, Ben, where the guy was talking about the disintegration of a major cycle. And the last one was around the beginning of the Epoch cycle,
Mhm.
was when the Reformation happened. Because before the Reformation, right, the church was really the power structure of Europe.
At
And
100%
they
correct.
were like the Fed and the presidency rolled into one.
They
And
controlled everything.
yeah, so then the nation states took a long time. That was the next stage of development. But in between, there was the Hundred-Year War. There were all kinds of things, and we don't know exactly what the next idea is either after the nation state is challenged. So this cycle's so huge that people that think about in terms of just a business cycle and recessions, I think are missing the magnitude.
I think you're 100% right, because it is the organizing principle of the globe are going to change.
Yeah,
And as you said, we don't know what it's going to be yet. We just know the characteristics of it. It's going to be more decentralized. It's going to be more local. It's going to be more tribal. It's not going to be this, United Nations or this large multinational one government type of thing that they're going for.
yeah,
That's not going
vacuum.
to work. It's just not
Okay,
going. It's not compatible with the cycle, so it's not going to hold. Whatever they try to do, that's centralized.
that's good news.
Yeah, absolutely. That's the good news. All right, here's the economic headwinds that I see. We know that there's going to be reduced global trade because of tariffs. We know that there's going to be reduced global trade because of these tribal disagreements, right? With sanctions, and you can't buy this person's products. You have to only buy our products. All that stuff sort of fits with less business being done. The conflicts, the war, regime changes, those are not great for business, right? People don't make investment decisions or say, hey, I'm going to take a risk and open up a business if they don't know who's going to be running their country, or if they don't know whether they're going to have a building or a factory because there's bombs falling all over the
So
place.
it's only the military industrial complex that is favored in these times, or do they suffer too?
No, that's one of our opportunities is
Okay,
exactly something else we talked about, aerospace defense.
okay,
100%, it's an opportunity.
okay.
I call this one the AI CapEx hangover. I think it's coming. I don't think it's 10 years down the road. I think the disappointment and the disillusionment is going to hit at some point this year. And when that happens, you're going to see a pullback in CapEx. And I think, what did they say, that over half the GDP last year was due to the AI CapEx,
Yeah,
half of the
big,
growth.
big part.
So we're looking at that. The other thing is debt, the debt overhang, right? Debt reduces your productive output because it has to be serviced, right? Interest has to be paid as opposed to being invested or being given out in wages or profits to somebody. So
Bondage.
yeah, so the debt is going to cause, economic headwinds as well. Let's talk about war. The US has been involved in a major conflict every 80 or 90 years. You go back from today, you're talking World War II. You go back from that, you're talking the Civil War. You go back from that 80, 90 years, you're talking about the Revolutionary War that founded the country. It's just a cycle that we are pretty well entrenched in, which means that the window for the next year, two, three, there's a pretty good chance. Probabilities are very high that this cycle is going to have an effect, and we are going to be in a major conflict. It may be internal, it may be civil, right? It may be a civil war. And I think you were seeing the potential of that and how that could play out in Minnesota.
Yeah,
Where a state just says, you know what? We don't care what your federal laws are or what your federal powers are. We don't want you doing it in our state. And that's going to play out in a kinetic way if the cycle has its way. So that's one thing. I think the competition for resources is obvious.
yeah.
Almost every war is a competition for resources. In this part of the cycle that we talked about, where if you don't agree with me, you're evil or you're bad or you're subhuman. These ideological differences could certainly result in conflict. Economic malaise, when people have trouble at home economically, the leaders sometimes turn to war to distract people or have them focus elsewhere. Internal revolutions. It's not just a U.S. phenomena that people are unhappy with the government. It is a global thing. Look all over the world. The people are unhappy with the rulers that are governing them. And the sort of philosophy that is going to be the overriding principle is every man for themselves, and in this case, would be every country for themselves. There's less concern about alliances and sort of multinational organizations and more of like what's good for our country. Let's talk about 2026 and the characteristics. If you look at numerology, 2026 is a 1, right? You got 2 plus 2 plus 6 is 10, and you get rid of the 0, it's 1. So it's a 1 universal year. And 1 is the number of new beginnings. It's also the number, going back to the war, it's also the number of aggressive male energy, which is like Mars and war type of thing. But what can we think of is going to be supported by that 1 universal year? Well, gold and silver and the price action there is definitely signaling people's lack of faith and belief in the current system and the current fiat system. I think we have an elevated and much higher probability than normal of a monetary reset this year because we are 55 years from Bretton Woods in 1971, when Nixon ended Bretton Woods and took us off the gold standard. 55 is in the Fibonacci series. You know, everybody, I think most people know what the Fibonacci series is. You add the two previous numbers together to get the next number in the series. And markets and cycles respond to this series and Fibonacci numbers. So we're in a Fibonacci year from then, 55 years from that time frame when we went off the gold standard. And then there's all those Nixon-Trump connections that you and I talked about multiple times over the last, 6, 8 years since Trump's been in office.
Yeah.
And the crazy thing, Dale, is the things that Trump keeps doing continue to correlate with the things that Nixon did. You know, including this new affordability push. Like Nixon, who was, very conservative Republican, he put in price controls.
Yeah.
Right? Because he was trying to, squelch inflation and address people's complaints about cost of living and all that.
Was that the win buttons, whip inflation now?
That was, I don't know if that was Nixon or Carter and Ford. I can't remember, but it was in that era.
Yeah.
The whole thing is that these guys are connected cyclically. Nixon took us off the gold standard because of issues of debt and the economy. And I wouldn't be surprised if we see some sort of monetary reset again to fulfill that cycle.
Do you think it has to do with the stable coins, Ben?
It might.
They're putting out, or some type of.
I think it might. They're supporting that. I mean, because remember, the stable coins are a way to have people buy treasuries to back them, right?
Okay.
But somehow I think it's going to be hard asset involved, just because of where we are in the commodity cycle and the connection back to the 70s. I don't know if it's going to be a combination of like gold reserves and crude reserves, the things that we have a lot of here in America, that could back the currency. But I don't think the current fiat system, the way it is going to continue. And gold and silver and the price action there are telling you something is up.
So cash will be worthless?
I don't know if it's going to be worthless, but it's going to have to be. It's not going to be like we can just print dollars and people accept the dollars. It's going to be, okay, what's backing that dollar? What supports that dollar? So
there'll be a new dollar in some form.
The existing dollars will still be valuable, right? Because we're one of the few countries in the world that's never canceled our currency.
Right.
Right. So I don't think they would cancel the currency. I just think it would be revalued based upon, a barrel of oil, a troy ounce of gold, some combination of something. I don't know what it's going to be, but I just have this feeling it's going to be a hard asset backing.
Okay. So it's hard to know whether cash that you hold is going to be devalued or revalued.
Well, if you look at gold, it's already been devalued, hasn't it?
Yeah, that's right. Good point.
Yeah.
Okay.
So anybody who's over 40 knows and recognizes this, right? How about the music? Here's the music, Dale. Tell me if you can hear it.
Not really, but oh yeah. Yeah.
I was going to get you to sing it, but I said, oh, let's let Burl Ives do it.
Yeah, that's who it is, Burl Ives. Yeah. Gosh, yeah. Yeah.
But listen,
let me go. But before we continue, let me go get my blankie.
Your what?
My blankie.
Oh, your blankie, right, to watch the Christmas special.
Yeah.
So the reason I bring that up is everyone's talking about silver and gold, right?
Yeah.
Everybody's talking, it's on everybody's mind. And I looked at the words, of the first stanza. It's silver and gold, silver and gold. Everyone wishes for silver and gold. How do you measure its worth? Just by the pleasure it gives us here on earth.
Wow.
And so again, everything's cyclical, right? This is from what, the early 70s, late 60s. I don't even know
Yeah.
when this came out.
Yeah.
But silver and gold is prominent again, right? It's
Yeah.
on people's minds. It's an important thing, and it's not by accident. This is how the cycles work, right? They
Yeah.
don't exactly repeat, but the same themes come up time and time again because human beings haven't changed in thousands of years. We're the same. We have the same wants, the same needs, the same foibles. So this is why cycles actually work.
Yeah, I mean, people are very aware of it. A few years ago, I tell this joke about the debasement trade, that people thought the debasement trade was a room underneath your house that you put a few screens in, and that was debasement trade. Yeah,
Yep, that's a
before
good
they
one.
knew what debasement was. So
Right. There you go.
anyway,
There's
yeah,
another angle on debasement.
yeah,
Well,
it's a dad's joke. Okay,
here's
wow.
here's a perspective, a monthly
Yeah,
perspective on gold. Okay, why am
yeah,
I showing this? Do I think that's it for gold? We're done. It's going to crash now? No.
yeah.
Do I think the parabolic move is done? Yes.
Okay.
Okay, because what we did and what I'm highlighting here, this is a Gann, it's a Gann square. This is the grid,
Yeah,
and this is off of the low in what is that, 2099, 2000?
yeah. $200
Yep.
about.
And
Yeah,
so what we've done is we've gone up 350 degrees in price, and we're across 315 degrees in time. And again, this is 315 months. This isn't
yeah,
5 minute bars. These are monthly bars.
yeah. 30
So
years.
we've actually squared out. Again, does that mean we're going to collapse? Because we've been squaring out all along the way. No, I do think we're going to have some sort of pause here, some sort of consolidation, kind of trading range. I mean, gold's got like a $200 range today, just today.
Yeah.
So maybe we chop around here. I mean, as you can see, Dale, we could pull back, significantly, and it's still bullish.
Where's that level?
That one's about 3,000.
Okay.
But I don't think we're going to see that sharp of a
No.
pullback. And the reason is this was not done by retail, right? This is
Right.
not a meme stock or a meme coin or something like that.
Maybe at the end it was.
What did that was central bank buying, right? Central banks have been buying this thing
Oh,
steadily
the gold. Yes. Okay.
for a reason,
Right.
right? Because there is a higher probability that monetary reset's coming in,
Yeah.
and gold's going to be a part of it somehow. So
There's
do I
people
think
talking
gold is done? No.
11,000.
Did I sell all my gold? Absolutely not.
Some?
Do you take some profit? Of course, right? If you're a
Yeah,
trader,
I
you got,
did.
got to put some in the bank.
Well, I mean, even physical, I sold some silver.
Yeah, I sold it a little,
Because
even a
silver,
little physical.
yeah, because silver already reverted. It was a reversion trade to the mean on gold silver ratio. And when it was 110, my long-term target was about 40. I
Right.
didn't think it would do it in 6 months.
No, no. That was the thing. The speed was just incredible.
Yeah,
So let's look at silver. Silver's a similar thing,
yeah,
right? We're squaring out on a monthly basis from an anchor, back in the early 2000s.
yeah.
So do I think silver's going to collapse like it did after the Hunt brothers? No, I don't.
Yeah,
I
me
think,
either.
again, we're going to have a higher plateau. But the good news is we don't have to predict, right? We just watch the levels. We see, does it find support at important levels? If it starts losing those levels, then we're going to have to say, hey, maybe that was the peak. Maybe this was a, super cycle high, and we'll never see that again in our lifetimes. But price will tell us going forward. So that's another square out in silver, monthly basis. So that's
Okay,
a big deal. Those are big, big moves. Here's what I think could be the next silver.
okay.
And I knew you'd like this one because you kind of feel the same way. This is crude oil monthly. These circles are interesting to me because they're also like the squares. They have a certain geometry that affects prices.
Yeah,
They cap moves. but they
Right.
also, once you get to the outer edge of a circle, can create fast moves up. And then when they fall out of the circle, you get a fast move in the opposite direction. The reason I'm showing this chart to a lot of people and why I think there's some good potential in crude oil is we've just finished coming down the outside of this circle and being caught by the geometry on a monthly basis, which forced it down pretty sharply, right, over the last 2-3 years. We just escaped that circle. Again, when you escape the circle, the probabilities of a fast move in the opposite direction increase dramatically. So what am I doing? I'm watching on lower time frames. I'm watching, this lower 60s area to see if we can finally clear that. If we can, then on a monthly basis, I know if we clear 71, we're heading up to over 100. If we get over that, we're heading up to about 170. So
Okay,
now
so
it becomes a
70 is your
technical
big
trade.
number. Okay,
What's
70 is your major breakout number.
71 would be a big breakout because look at all the price action we'd be sitting above now once we're above that.
Okay. I was thinking 78, which was a high the last time
Sure.
there was a strike in Iran.
Yep.
But yeah, $80 is also, I think, an important level. I'm thinking if we get over 80, then you can declare the end of the bull market. But I think it could fail from up there. It's going to be
Yeah.
interesting to see, how our president feels about energy prices.
He wants it at 50.
He almost got it. He had it at 54,
I
right?
know.
So he got there. But, I was thinking that after that meeting with the CEOs of the major oil companies, that he wouldn't mind higher oil prices because a lot of them were risk averse to go down to Venezuela
True.
and pour money in. So, maybe a higher price is he'll be okay with it.
He's got to find that balance. The other thing making me think this could be the next big silver, like a silver move, is if we do get global conflict,
Yeah.
oil is going to be hard to move, right? It
It'll be
has to be moved on vessels and all over the world. It's not if the world's at war, it's going to be tough. Supply lines are going to be much tougher.
It's going to be 500 a barrel under the circumstances you're talking about.
It's possible.
Yeah.
It is possible. All right, let's look at some Gann squares and Gann time counts. Gann's time counts identify periods where a change in trend is more likely, right? Doesn't mean it's guaranteed. It just means you have to watch it and see, does the price action, validate that time. 90 and 144 and their derivatives are key numbers, right? In Gann. And anybody who studies Gann knows that. If you haven't, 90 and 144 are important. The week of April 11th this year is 315 weeks from the COVID lows. January, that we just finished, is 202 months from the financial crisis lows. So those are some time counts that I've had on my radar for a while. With Gann squares, you also get price because remember, we're always looking for price and time relationships because if we get the two of them in sync, it can signal a change in trend. 90 and 144 are the key numbers. The squares show you key points where price, if it gets on top, it's support. If it gets stuck under, it's resistance. The weekly is at that 315-degree price level from the 2020 lows at 72.29, and it squares out from the April 25 lows at 71.34 the week of February 20th. So those are a couple prices that I had on my radar. I actually think we might have already topped out, and I'll show you why. If you remember last year when we were talking in summer and the fall, I said, I think we got one more high left.
You
we
did
get a push up and made a marginal high. And I think we might be done, but these are two targets that are still out there. On the monthly, 71.71 is a target that's still out there. So if support holds in here and we push up through the highs, these are some targets you can use that would square us out. And you can see here on the weekly would be the square out we were talking about.
Yeah.
Price and time would be equal at that level. And on the monthly you could, the reason why I'm saying the monthly that we may have already topped is the monthly hit 3/8 on the square, which sometimes it doesn't make it the final eighth, right? It's that plus or minus sort of thing. And of course,
Right.
we had the timing in January, and we know the high came in this past month. So we're watching to see, do we get technical confirmation that the high is in? Do we start making lower lows and lower highs
What level
on
would be
shorter time frames?
what level would give you like uh tell you that you know you have to be aware that the market's topping out here, taking out 6,800, 60, does it have to be 65 or is
I
it
don't, I
higher?
don't, I don't have a price level on the downside. I'm more looking at on the shorter time frames. Are we making lower lows and lower highs? Right?
Yeah.
Because the monthly is going to be the last to react because it's, it moves. It's the aircraft carrier. It takes a while to turn it around. But
Yeah.
the shorter time frames are going to start showing us, hey, we're not making new highs and we're making lower lows on every pullback. And that's the kind of thing where then you got to start saying, all right, like for now, I'm looking at pullbacks to sell, just because of what's happening on the shorter time frames.
Yeah.
And that'll
You're
give us that
selling rips,
confirmation.
not pullbacks. You're selling rallies, not
That's it.
pullbacks. Yeah.
That's it.
Okay.
Yep. Let's talk about opportunities. Because of the housing cycle that we're in, it looks like it's going to be another 3 years or so of rough sledding for housing. We're looking to sell the builders. We've been in this trade for a while. We've talked about that. Because of the war cycle and things that we expect to happen geopolitically and globally, we've been long aerospace for a little while now. We still think that trade's working. We're still a believer in hard assets that cycle is flipped, right? From the non-commodities to commodities being good performers. So the stars there right now that are set up are wheat, corn, and soybeans. So we're watching those. Beans are up 35 today. I don't know what the news is, but beans are up 35. I just noticed that. We've been talking about this trade since the fall, as you mentioned, Dale, selling private credit. We do
Yeah.
think problems are going to occur there because a lot of the lending occurred there. In any cycle, you look, where did the most lending happen? Chances are that's where the problems are going to start. And the dollar,
The commercial banks financed it, so they're not immune. They didn't do it, but they're the backers.
exactly. The commercial banks gave the money to private
Yeah.
credit, which then lent it out recklessly. So it's like by proxy, they did it.
Yeah. Yeah. It's
And
funny.
and this is one I think you're on board with me, Dale. I think
Yeah.
the dollar, it looks like a good setup in longs for the dollar. I think they cleaned out with this last move lower. They kind of
Yeah.
cleaned out any potential longs that were there, took their stops, and I think they're ready to run. And this is true, and Dale knows this because that's why he's Forex Stop Hunter is his handle. Any major move in commodities, currencies, markets, it's done with misdirection at the start.
Yeah.
They do a false break in one direction, and that starts the big move the other way. If you go back and look at your monthly charts, look at your weekly charts, you'll see it in so many markets.
Oh, it broke. Yeah, and the dollar broke. I don't know. People are talking about I don't know, 5-year uptrend line that it held
Right.
last time. And I'm thinking get those people, and I will, actually some people that know my stuff redirected me to the long side of the dollar because I thought it had problems after that too. But then I thought about it, like you were saying, who's long now?
Exactly.
So anyway, do you have upside targets that you think the dollar could get to?
Yeah, we'll talk. We'll
All right.
highlight these
Okay.
these charts. Here's your builders.
Yeah.
Okay, so just purely on technicals, we're
That's
getting
just
lower highs.
starting. Yeah.
Yeah, we're getting higher lows, but here's your main
Yeah. It's
here's your main
triangle.
swing on the weekly, and we got
Yeah.
a lower high, and now we're working. And look at how we're getting caught under the square here, right? We tried
Yeah.
to push above the square here, failed.
Yeah.
Tried to push here,
Yeah.
failed.
Yeah.
That's signs of resistance and sellers being dominant. So I think the builders are a decent short here. Aerospace and defense. I mean, look at that.
Buy dips.
There's a bull market always somewhere, right?
Yes. Booyah.
Yeah. So yeah, buy dips. Look, if we pull back into this area here for some and it holds a support, it would be a great buy right there. We failed up here so far, so expect some weakness. But look, watch the technicals, and if this support holds and we reverse, it would be a hell of a buy there.
Okay.
And this again, capitalizing on the war theme. Here's wheat. And commodity, Dale can tell you, commodities do this, right? They go sideways for a year, 2 years, decades sometimes, and lull you to sleep and then explode.
Market's bottom, yeah, market's bottom in silence.
Yep.
And top with violence.
Yep. Perfect example of that. There's your top and in violence, right? And here's bottoming in silence, just indifference and bored. But there's signal here, right? You're watching. Little false break at the low.
Yeah.
Higher low comes in. Let's see if we can make a higher high on this next push up, and that's how it starts.
Just a 50% retracement from the invasion high is a huge trade.
Huge move. Huge move.
Yeah.
So
I think this is in the next silver.
Corn.
Maybe it's beans. Oh yeah, corn looks good.
Here's another one. I think this one looks good. Made a low, got to push up.
Higher low.
ABCD down, higher low, push up. We're holding above this 412 level, which is a key, full square. As long as we hold above here, we go and attack the next level, which is in the 500s. So corn looks good. And then beans, like I said, beans is up $30 today, but
that's a big move.
Here's the signal. Look at the signal.
Yeah.
Made a low, higher low, another higher low. All the while we're in this channel, and everybody's like, "Oh, this is going nowhere." But look at what it did over here when it was in this channel. Once it broke out.
Yeah.
Same thing. False break, higher low, gone.
And the fundamentals, people don't want to buy them because they're hearing about farmers in trouble, the tariffs, and they're right. There's plenty of supply in wheat. So people are saying as far as supply, things couldn't be better. And you know what I think when people say, you know what, Dale, things couldn't be better? Believe them that they can't get better.
Right, that's right.
Believe them when they say that.
And so price reflects that.
Yeah.
So beans also looks really good, really good.
Nice.
Here was my favorite private credit short, Blue Owl Capital.
Yeah, you've been talking about that
for a while. Look at this thing just melting down.
The head and shoulders target's -20.
It's funny you say that. I was just saying this thing could go OB.
Yeah.
It really could go. And if for anyone who doesn't know, OB is out of business.
Yeah.
Wow. Who thought Bear Stearns could go out of business in the last go round, right?
Yeah.
But it's trading like something that there is a major problem with it.
Yeah. You know what?
This short's been working out very nicely.
Well, you know what they'll say when the regulators come in there? What do I say? They'll go, who? 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 Not me. Who?
Right. Exactly. Now, here's one of the reasons, other than positioning and all that we were talking about, how negative everyone on the dollar, that I think dollar longs look good. And you go down to, this is a monthly, but you go down to shorter time frames to sort of see good setups, right?
Yeah.
We've done a perfect, almost perfect, like 99 point something percent accurate Gartley. This is a Gartley pattern, right? Into an ABCD down into this low. So we've got an ABCD down into completing a Gartley with a false break at the low.
Yeah.
That's a very good technical setup.
So, I mean, I'm looking for 102, and that's people think is aggressive, but this chart is pointing more like towards a 120 type of scenario.
I think you could go up into these numbers on a big rally. And again, this is the monthly, so we're not talking about next week. This is
Right.
maybe over the next year or two, but
Yeah,
I think the setup is there in the dollar. And look, if you're wrong, and you always got to look at what if I'm wrong,
exactly.
right? You make sure you can handle, you know where you're wrong first, and make sure you can handle the loss. And that's how you enter a trade like this. You
Amen.
don't go in because you think, oh, it's 100% guaranteed going up. There are no guarantees in trading. There's no 100%. It's all about probabilities.
Yeah, it's more important to know where you're wrong than what the upside or objective is.
100%. And so that's the end of the ideas. As as Dale said, we do have a little YouTube channel. Everything we do is free. We offer it all out there. It's for information for people to learn, but we do want to grow the channel. So if you could subscribe, like the videos, comment, do those sorts of things, that's very helpful because the YouTube algorithms are tied to those. But every week we put out a video where we review the major markets. They're generally about an hour long. You can skip through the stuff you don't, the markets you're not interested in, but we cover the major indices. We cover Bitcoin. We cover commodities. We cover the NASDAQ. I mean, we go through all the stuff that we see, and it's not sort of a 1 week video. We try to tell a story because the markets do tell a story, right? And every week we get new chapters that we get to read and we get to look at, and we add those to the story, and we can see how the storyline is coming together or how it's changing. And so that's what we do there. I also post on X regularly. That's the handle. Try and post every day the short-term comments on NQs and ES, and then anything else, commodity wise that I've been talking about, I'll throw it up there. In addition to the cycle stuff, I'll post a few, the Rebel Yell cycle or the Lightning cycle, or 2 cycles that I post when we get hits. And people like it. It seems to help them, and that's the idea. Is hopefully they can get some value out of it and add it into their trading to help them compete.
Yeah, so Ben has these long-term overviews, but I've seen his stream, and he does focus on trading scalping opportunities as well as longer-term outlooks for things. So, you know, people talk about forecasts, Ben. I talk about, you know what? I don't make any money with my forecasting or lose any money with my forecasting.
No.
It's my trading. So you could have a forecast and maybe it doesn't manifest, but it doesn't mean that you lost a ton of money, because a forecast and a trade are two different things.
That is 100% right. I mean, there's analysis and then there's trading.
Yeah. And we're
And,
always reassessing.
and you're always reassessing, and trading is about managing risk.
Yeah.
Right? How much risk do I have to take to get this potential return? And are the odds in my favor?
Well, I've learned a lot from Ben over the years, and I've had my eye pointed towards things that I should monitor. And then when they line up with my work, I go for them. And I think that you guys should do it too. Follow him on X, go to his YouTube channel, and have Ben and his partner Barry, who's smarter than Ben or I because he's not here in the US, he's in Costa Rica.
And
Where
he's
Ben,
a great technician. I'll have to get him onto your show,
all right,
Dale. He's
where we
really
should
good.
be before the Civil War breaks out, we should be
Yeah, that's true
Costa
too.
Rica, trade from there instead of the basement. And Ben, uh, really, I always enjoy spending time. I didn't know we'd go an hour. I hope you don't mind, but thanks for edifying our community and people everywhere with some ideas that we're going to have to navigate through.
Listen, Dale, it's always great spending time with you. It felt like 10 minutes, not an hour. So sorry we ran long, but I'm glad we got the information out. And like I said, I always look forward to it because you have a good take on things that I don't always see. And it's you never, in this business, you can never know anything and everything. And
Yeah.
The people that you talk to can give you insights. I mean, anybody can give you insights that can
Right.
escape your view because we all have our own biases, right? We have
We
our
only have two eyes.
That's right.
I wasn't bullish a dollar until a few other sets of eyes said, Dale, that's your stuff. That's a third drive on the weekly. And then I
Right.
looked at it and I went, yeah, thanks, guys, for reminding me of my own work. And so, everyone, my trading warrior brother, Ben Maldonado, for many years. And great having you here, Ben. I had a great
Appreciate it,
time.
Dale. Always a pleasure. And best of luck to everyone out there. And of course, best of luck to you, Dale.
Okay. And remember, everyone, don't just count your pips, count your blessings. This will be out on YouTube within 5 minutes. Adios.
Take
Thank
care.
you, Ben.
All right, Dale. Take